Hey, GM and GN everyone, this is Clément from Commit, and today I'm with Arjun from Mantle. Arjun, please, could you introduce yourself?
Sure thing. So, hey guys, I'm Arjun. I'm the head of ecosystem at Mantle. And I've been in the space for some time. So I've been in the space since 2016. I've been tracking. Started with Bitcoin, then started, found Ethereum. Was completely blown away by the idea of decentralization, and then decided to make it a career. So I've been in ecosystem roles pretty much throughout. And prior to joining Mantle, I was head of BD and growth at Polygon for almost about 3 years. Post which I joined Mantle last November, and now will be leading the ecosystem at Mantle.
Okay, awesome. Thank you very much. This is my first question,
Mhm.
and it's always the same for everyone. Could you sell me Mantle in under 30 seconds, please?
Okay, sure. So, okay, another 30 seconds. Okay, let me take a quick crack at it. Right. So, Mantle is a modular layer two chain built on top of Ethereum. From a technology perspective, we've gone with modular design where we're working with eigenlayer for data availability. So, our chain is very fast, it's very efficient, and it's also very low on gas fees. On top of that, we also have a very large treasury. So we are a blockchain with a treasury of around $2 billion, and that treasury is held in a DAO, with which all assets are mobilized via a DAO, a snapshot vote. In fact, Mantle itself was created through a DAO vote, where the DAO voted to create infrastructure, and that's kind of how the chain was, came about, and that's how the team was built. So we're very community focused, community owned, community governed chain, and we feel that this is how blockchains should be built. So that's just a quick brief about Mantle.
Okay, awesome. So you talk about Mantle having a modular architecture.
Mhm.
Why is it so crucial for scalability?
Got it. So this is a very interesting question, and generally, as so, if you look at blockchain design theory, right, how it's evolved over a period of time, you kind of see many parallels with how Web 2 technology evolved, right, and we're seeing some of that in Web 3. So I'll give you an example. So if you look at Web 2, and if you go into, let's say, the 80s or the 90s, or even the early 2000s, right, you what we used to see was huge, like very complex monolithic softwares, right, where if you fast forward to today, in Web 2, you've got a, entire Web 2 sort of infrastructure globally is today run by APIs, right? So instead of having one big piece of software, you've got 10 or 15 different like softwares, each specialized tools, interacting and coordinating with each other via APIs. And this is how like enterprise software is developed today. Now similarly in blockchain, what we saw with Bitcoin and with Ethereum as well, is that it started with monolithic design, where all the different layers of a blockchain, whether it is transaction finality, transaction processing, consensus, data availability, like all of these were wrapped into one monolithic piece, right? Which is kind of how it started. But what has happened is over a period of time, as blockchain scale, what we realize is that monolithic designs tend to become very complex and difficult to upgrade, difficult to work with, which is where modular design essentially offers a way out, where you split up the blockchain's components into different modules, and all of these modules are now interacting with each other. So this way the system becomes more fault tolerant. You can swap out modules and in some sense upgrade the chain continuously without any major disruptions. And what this has allowed like blockchains to do ultimately is to evolve faster. It has also created a situation where, yeah, at every different layer now we are seeing many types of innovations. So for example, in a monolithic layer, it's difficult for any innovation to happen, since all the layers are so tightly bound together that one change in one part of the blockchain could trigger like a fault on another part of the blockchain. But with modular design, what we see is that there is now a level of specialization. Like there are companies focused entirely on solving data availability. There are companies focused on solving consensus. There are companies focused on just creating different types of virtual machines for Ethereum. So modularity has created this very interesting situation where not only do you have an architecture which is much more scalable and much easier to operate and upgrade, but it's also sparked this new innovation in each of these layers. And I think this is very important because this is what will take the space forward. So we're big proponents of the modular design theory. And so, for example, just to give you a sense, we're the only production blockchain which uses eigenlayer, right? There's literally no one else, right? So we've in some sense been spearheading this movement towards like building modular design, and we have great confidence in our design. Our mainnet has been performing really, really well. The fees have been low. I think everybody who's used our blockchain has told us, given us great feedback. So in some sense, we've kind of proven that not only does this work, what you will see as we continue to improve the design is that how easy it would be to upgrade and then continuously improve as well. So we're big believers in the modular design theory.
Okay, so I will continue with compatibility and layer 2 scaling. So what are the
Sure.
major challenges when it comes to ensuring like EVM
Mhm.
compatibility in layer 2 scaling, like Mantle?
Hmm. So, in terms of so one of the things, if I had to start to answer this question, I think one of the things what you've seen is that the barrier to entry of creating your own layer two chain has reduced drastically. Like over the last couple of years, like today, you can have a layer two roll up ready in maybe inside of a month. Using OP stack and so many other solutions have come up which allow you to like quickly launch a roll up. So I think this is great for the Ethereum ecosystem in general, that the barrier to entry to creating your own chain is really it's reduced so much that with a very small team you can launch and successfully run a roll up chain. What this has also meant is that the space has also become crowded, right? So there are a lot of blockchains. Several times people say that there is more block space than there are applications in blockchain, right? And we're fast getting there, I would say, right? But what this also means is that a very big barrier in blockchain adoption has been solved. Like to an extent, technology now exists, which is very scalable, high performance. It's only getting better with time with ZK and other innovations. That
Yeah.
the next like it's possible today to build those kind of mass market killer apps where you could have hundreds of thousands, if not millions, of users, and it would be possible to run this kind of an application on chain. And so I think this is like great for the space in general. And what this also means is that there is a great deal of competition. So obviously blockchains need to find ways to or need to have unique properties to entice users and developers. So one of the things which what we felt would be very interesting is that we bring like a modular design to market. Like we wanted to bring the most cutting edge tech to market, and we want to build it in a collaborative fashion, which is kind of why for data availability we're working with Eigenlayer instead of trying to like build it ourselves or do something like that. What we also wanted to do is we wanted to have like a very strong like sort of ecosystem support. Now this is very important because technology continues to evolve with time, but technology in Web3 is also open source, right? Which means that the day you launch your technology, everybody has access to the same technology at the same time. So in Web3, technology cannot necessarily be a moat, right? So the only moat you'll actually have in Web3 is ecosystem. Like ecosystem is the ultimate moat in Web3, which is kind of why like ecosystem design and ecosystem support is super important to us. So we have a grant program, we've got an ecosystem fund. I would say every blockchain has that, but we have a much more hands-on way of working with our ecosystem. We're also doing other unique things, like we're liquid staking assets from our treasury, so that we can take the liquid staked asset and we can then use it for liquidity provisioning projects on the chain, right? So we are lucky to have a very large treasury which has close to about 270,000 ETH, 212 million USDC, 73 million USDT. So we've got a lot of these blue chip assets which we can liquid stake and then deploy the liquid staked asset on chain to basically provide liquidity provisioning to any kind of DeFi project or any other kind of project. And the yield which we get from all of these assets, we can use for incentives on our blockchain without having to dilute our own token. So this is like very important because what you've seen in the past is that blockchains have tried to increase the liquidity on the chain, but they've had to sacrifice their token in the process, where you have to put your token out there and your token sort of reaches while a high degree of distribution, but also a high degree of dilution. So in our case, we can prevent this dilution or rather slow it down drastically because we've got all these incentives coming from our liquid staked assets, which we can then use to deploy on chain. So I think this is kind of where our ecosystem building will be unique, where we have the ability to provide rewards for a very long period of time and sustainable rewards. And apart from
Okay.
being working very closely with our ecosystem, and I think the last point I would just make is that we also work very closely with Bybit, the exchange. So we have a DAO, we have
Okay.
the liquidity, we have the chain, and we also have an exchange which works closely with us. So we can take a developer all the way from 0 to 100, where a developer starts at zero, gets a grant, gets investment, and all the way to listing, which is a unique like sort of, let's say, value proposition which frankly no one else has in the market. So I think this also gives us further firepower to be able to not just attract like high quality projects, but to build blue chips of our own, where we can take projects all the way through their journey from zero towards becoming like a unicorn company, which again is something, like I said before, it's unique only to us. which is kind of like how we want to think about like ecosystem design. So I think ecosystem design and advantages are very important. This is the only way you can layer twos can differentiate themselves from each other now that the barrier to entry of creating a chain is gone. And now chains really need to like figure this part out, and whoever does this the best is the one which is going to be around the longest.
Okay, awesome. Um, you mentioned quite a lot about the DAO. Mental
Mhm.
is based on the foundation of the DAO. Uh,
Mhm.
how are DAOs changing the governance game in the blockchain ecosystem? So you,
So I think it's super important, right, for us to figure out these problems, right? So if you look at DAOs in general, right, I think everybody in the Web3 space has been a big proponent of decentralized decision making, but decentralized decision making requires you to have tooling, right, which first of all allows you to do that. Second thing is you need to have unique mechanisms which incentivize people to also vote and make their voice heard, right, so that you can build like a really strong engaged community and sort of a project which is then led by the community in some sense, because that leading part can only happen if the community is engaged and involved in the decision making process. So I cannot say that anybody is perfected governance, but it's something which we are very passionate about and what we want to experiment with, because like I said, like the genesis of Mantle itself has is through a vote, through a DAO vote. So we are a community first project, no matter which way you see it, and almost all major decisions which we take within Mantle are taken by a snapshot. In fact, you can go to our website mantle.xyz and you can go to our governance tab where you can see all the other tooling as well, like a delegation tool which allows you to delegate votes. There is a treasury monitor which allows you to see a live PNL of all the money we're spending, because our all the funding which we have comes from the DAO. So I think from that perspective, what we feel is that this is how blockchains should be run. First of all, they should be owned by the community. Secondly, they should be run and governed by a community, right? And ultimately the community members should benefit from the value which is being created on the chain. And if you follow these tenets to the T, then you can build an ecosystem of the future. So what we feel is that a community first approach is something which sometimes we feel is lacking in the space, because there are so many chains which are so heavily VC led that literally the community has like next to no say in the future of the project, and we don't feel that this is how blockchain or Web3 projects will be built in the future. I think all future projects are going to be community first, and we want to lead the way in that process. And like I said, that requires us to really become very good at governance and also build all the tooling required, and both of these things we're actively working on. And you can see all the different tooling which we have, and you can use it, and you can also see how what kind of decisions we are taking through governance and what we are not doing through governance. So for example, day-to-day functioning, governance would not be effective, but any major decision which involves funds, which involves assets, like we have to involve the community. So we're kind of evolving a mechanism, and I think we'll only get better at it with time.
so this is really interesting. The way you put the community first. Do you think that DAOs are inherently more secure and transparent than traditional corporate governance models?
I do feel so, because number one, by being on chain, all activity is recorded immutably, right? So whoever's voted, whoever's not voted, has voted with what weight, right? So you can see whoever are the holders of the assets, what voting weight they have. So I think that by itself ensures like a huge degree of transparency, even if you don't have, let's say, KYC or something like that. Like you may not need know the user, but you can track the user. Like you can see all of the stuff on chain today, on who has like the highest, let's say, delegation, or who has, let's say, the most like voting power, and those kind of statistics. So because these are out in the open, what we've also seen through our own governance, that definitely it's like a lot more transparent and superior, I would say, in many ways to Web2 style governance, right, which is corporate governance where you have a board. And we've seen time and time again, like that kind of a model doesn't necessarily scale with time. Like companies are well run for a period of time, and then board members change, CEOs change, and then completely something else happens. So if you give more of the control to the community, like the project will just have a longer lifespan, and you'll be able to take more effective decisions with time, because as your project decentralizes more and more, the voting power gets distributed, right? So your ability, and more importantly, outside of distribution, you are able to bring more people or other experts into your community, right? So the quality of decisions which you take only increases with time and doesn't decrease. which is again a very unique feature of the style of governance. So that's kind of why I feel that the future is community owned governance. Like as a company, this is what you should aim for, and if you can do this effectively, then yes, then it's a very good chance that your company can sort of be relevant or stay alive for generations to come.
Awesome. Um, got a question about the blockchain itself. So,
Mhm.
Mantle is based on Optimium, which is optimism
Hmm.
OVM code base. What was the main purpose of building a chain on optimism instead of, I don't know, like there is a huge like trend for ZK rollups, for example.
Yes, yes. So I think first thing we wanted to go with something which is a little more tried and tested. So I think ZK AVMs were very exciting, but if you go back to the time when we were making this decision, ZK AVMs was still like relatively untried and untested. So what we felt is that let ZK AVMs sort of go through their own cycle of good 6 to 9 months or like a year of battle testedness before we decide to make that switch. And meanwhile, what we realized with the OP stack was that it was relatively easy to use, easy to modify for like making it modular so that we could add eigenlayer, etc. And we also saw several teams building with OP stack. So it wasn't just us. Like, in some sense, there was market ratification that this stack is possibly amongst the best out there. So with those sort of technical parameters in mind, we kind of felt that OVM would be a great start for us. Now, of course, we're looking at how we can go to Bedrock quickly, and then how we could potentially start to um, make or start to operationalize some plans around ZK EVM as well. Since we've been keeping a very close eye on the ZK space, and we do feel that maybe in a few months or possibly another 6 7 months the technology could reach a point where it becomes as efficient as OP Stack, and with the added advantage of instant finality, and you don't have to. There's no 7 day withdrawal exit period, all of those kind of things. So yeah, so I think ZK VMs have a lot of potential, but it'll still take a little bit of time. And on our side, we wanted to go with a tried and tested setup instead of like maybe exposing our community to a new kind of architecture which we ourselves may not understand in depth. So yeah.
Okay, and so still like based on that, what are the biggest security concerns you have right now regarding mental development?
I think security wise, we've got multiple audits, so I think we're a very secure chain. I think the only maybe sticky point for some people is the Eigen implementation, because Eigenlayer itself is not fully in production yet, right? So we've been working very closely with Eigenlayer, and I've written a lot of the code ourselves to make it go be production ready. So because Eigen's not production ready, people sometimes think of it as a risk, but there's no risk to the assets themselves. What we've kind of realized. So I would say that the network is very secure. I think to to double down on security as well, since we're liquid staking a lot of the ETH, we can take the liquid staked ETH and restake it on the Mantle data availability layer. And this means that not only will we get more yield now on all of our staked asset by restaking it, but in some sense we're adding security to the network. So that's kind of how we sort of thought about this decision, and decided to move ahead with Eigenlayer and with the kind of configuration which we have.
Um, when I look at the mental treasury, I can see that most of the ETH the liquid staking ETH you have they are from Lido. Don't you think that it does? I mean, in a way, it's, how can I say that?
So,
You are participating into something like least decentralized, because as we can see, like
mm,
nearly 30% of the whole ETH staked are from Lido network.
that's a very valid point. I would say that definitely in the liquid staking space, we need greater diversity of protocols, right? Which is happening. We see many people building like different types of LSD protocols. So I think it's good for the space. In our case, why we decided to go with Lido is because, first of all, while Lido is, I would say, maybe a little centralized, it's also very secure, right? So the security parameters and the risk controls are very high with Lido, which we saw compared to some of the other projects out there, which is kind of why we felt that Lido would be a great partner to start with. Now we've staked 40,000 ETH with Lido, but majority of the ETH which we have, which is almost like, if I would say in total about 267, 268,000 ETH, majority of it, a large majority of it will be staked with our own LSD protocol. So we're building our own LSD protocol because number one, it adds diversity to the network. Secondly, we can stake our own ETH and get good rewards and essentially offer a counterbalance to some of the other projects out there who may have too like high delegations, and thereby, in some sense, they become a risk to the network. In our case, we wanted to work with the network versus against it, so that's kind of why it just makes sense for us to just have our own LSD product, provide like greater security to Ethereum. We are also going to bake in MNT token utility into this as well. So the MNT token will have multiple levels of utility, not just within the chain, as gas fees and as the ecosystem token, used in all the different apps, also on governance, but it will also have use in the liquid staking product as well.
Okay, because I mean, in my opinion, this is something that it is there is a lack when looking at some blockchains. I'm
Mhm.
really testing all the L2s in the space right now, but I feel that there is some kind of lack of finding uh, many liquid stake ETH
They're
all
not many
around
big
those
ones.
blockchains.
Yeah, they're not many big ones. I think Lido is definitely very big. Rocket Pool is also quite big, but they're not many, which is kind of why we want to like create one ourselves,
No,
as well, right? So that there are at least 4 or 5 large players who have a significant amount of each stake, who can sort of, who are making the decisions. So yeah.
so yeah, my question was, could you break down what's orthogonal ecosystem growth strategy for normies?
Orthogonal growth strategy. That's a kind of interesting way of putting it. I would just say that ultimately, and this is, I'll just speak broadly, right? So that like, since we're saying for normies, let me explain it broadly. Is that within Web3, right? Since we live in an open source world within Web3, right? All the technology is open source. So ecosystem building has to be done a specific way. So if you were to compare, first of all, in Web2, technology is considered IP, right? So you have intellectual property, and if you have certain technology which other people don't have, it gives you a competitive edge, right? In Web3, since technology is open source, this is not possible. Like you can have um, a BSL license, like but your code will still be open. Like people can see your code and iterate and improve on it. They may not be able to copy it outright. So what it essentially does is it creates this very unique situation where there is a huge amount of iterative innovation, where people see, for example, let's say Clement has built something. I can see Clement's code and I might be like, hey, I can add this extra to it to make it maybe better or make it do something different. And then that becomes sort of my code base, and then somebody else would see my code base and do something different with that. So growth strategy in this kind of a world where essentially everybody is sort of in some sense innovating off each other's ideas, collaboration is extremely important. And this is kind of where I've seen that several people, when they come from the Web2 style of thinking, sometimes struggle to sort of adopt the Web3 style of thinking, because you have to not be protectionist in Web3. In fact, you have to be a lot more open, and you have to be a lot more collaborative, which means that you need to be able to work with other different teams and companies, sometimes for critical infrastructure. So for example, when you look at our blockchain, we're working with eigenlayer, right? For a block, for creating our blockchain, which is critical technology. A blockchain has to have 24/7 uptime, but we're still partnering with someone for that, because what we realize is that if you partner with people, then you can focus on specific tasks and thereby be able to build something which has much much higher performance. Similarly in DeFi, just to give you an example, like if you look at how the financial layers are built in blockchain, you have, let's say, the basics of finance, which is like borrowing and lending. You would have some sort of swap, which allows you to swap assets. You might have some sort of stablecoin issuance, and then you will see other protocols build on top of that, right? So if you have borrowing and lending, you can build leverage on top of that, or possibly some other kind of protocol. So protocols also build on top of each other, thereby continuously be able to reuse the same, let's say, TVL, and extract more and more value out of the same liquidity, right? So Web3 is very collaborative in nature, so it requires you as a person to be very collaborative. You as a person, it requires you to be very open, right? So this is kind of like the Web3 style of thinking, and sometimes it can be a bit difficult to start thinking this way, but once you do, it becomes like you'll kind of understand why the space is the way it is, and how you can build and create value for other people. And this is what I love about Web3 is that because protocols are building on top of each other, everybody's winning together. And this is unique only to Web3, where you don't win at the cost of others. You can actually win together and along with other companies in a collaborative fashion, which I think is wonderful, right? Because this fosters more collaboration, because people realize that, hey, to win I need to collaborate, so then I should be collaborating with as many people as I can. In terms of growth strategy, ultimately for any blockchain, it comes down to the unique advantages which you have, right? So I'll give you an example. So let's take Mantle as an example. Like, so we have our own liquidity where in the DAO, where we have like a lot, like all of these blue chip assets. We have close relations with an exchange as well. We've built an infrastructure which is based on OP stack, so super developer friendly. Like, like if you're an Ethereum developer, you automatically like a Mantle developer. So when you have your own liquidity, you have your own governance mechanism, you have like close ties to an exchange. This allows you to essentially build your own blue chip projects, right? So for example, what we realized is that at Mantle we have a unique power where not only can we attract other bigger projects thanks to the liquidity which we can provide, but what we can do is we can build our own native projects. So we should make native projects a very important strategy. Now this is because we have these unique gifts of just the way our ecosystem is structured. So depending on the kind of ecosystem structure you, or rather the kind of, let's say, levers you have to play with in terms of growth hacking, that's kind of where you can kind of define what your strategy needs to be, or what you should be doing. And with us, because we were born out of a DAO board, we want to be very community focused. Like a lot of these decisions we take with the DAO, we could possibly take some of them ourselves, but we always include the community, because like what that allows us to do is it protects you against bad decision making. So I'll give you an example of how this becomes strong with time, and I tried to explain it before as well. But when you have like, let's say, VC led, founder led chains, there's always this chance that the founder starts to make bad decisions. And when you have such centralized decision making, those bad decisions tend to add up, right? This is kind of where the community comes into play. Now imagine if you're a founder and you're making bad decisions, but you have other people around you who are able to tell you that don't take this decision or take this decision differently, right? You would not make those decisions. This is why collaborative community involvement becomes very, very important. So what we feel is that the more we involve the community, the quality of decisions we'll take will be higher with time, right? And it's so important also to have a very strong governance mechanism within any sort of, let's say, chain infrastructure game, is because chains essentially are creators of new value, right? And especially in our case, when you have an exchange as well working along with you, then you can create tremendous amount of value. But what we've also seen in several occasions is that some bad actors co-opt such systems and then destroy value for others. We've seen this with the FTX collapse and with other chains as well, where there's so much pump and dump action going on. Like, retail investors are not safe. This is where having a governance body is very important, because in Mantle we have our own SEC, right, which is the DAO itself. The DAO is always watching what is happening on the chain, and if we start doing these pump and dump schemes, then the DAO, who through a vote chose to sort of build a chain, can also choose to shut it down. Like the DAO tomorrow can decide that all of this pump and dump stuff is destroying value. We don't want this. Fire the team and shut the chain down. They can do that via governance vote. So having a watchdog which is decentralized in nature, right, who's constantly watching the chain and ensuring that bad practices don't take root and don't like foster within your ecosystem, is very important. This is kind of why community involvement in Web3 is super important, especially in blockchains which are creators of wealth. Because wherever you have creator, where you have like an engine which creates a lot of wealth, you need to have a very strong watchdog, constantly watching that. So this is kind of why our ecosystem is built the way it is, and that's why ecosystem, like, community involvement within the ecosystem, the ability to build very strong native projects, the ability to build other products like liquid staking derivatives, etc., to further augment this ecosystem, so that we can basically wrap this entire ecosystem around a single token, which is the MNT token, which, like I was explaining earlier, was used in the chain. It's used for governance. It'll be used in the LSD protocol, and it'll be used in other protocols as well, which we build in the future. So this is kind of how we've designed it. So whatever ecosystem strategy you come up with has to be unique to you, and a lot of that uniqueness comes from the levers you have to play with. Now, suppose I had different levers to play with, I would have a different strategy. And this kind of shows you why different chains follow different types of strategy. So if a particular chain is following a certain type of strategy, you can kind of understand that's because of the unique ecosystem properties or advantages which they have, and which is kind of why they want to grow the way they are doing it right now. So that's kind of like how you think about these things, and you kind of try to break it down what you need to do, and then you kind of build from there.
Okay, perfect. So we are entering the second part of this podcast, which is also my favorite one. So it's the yay or nay questions. So to recontextualize this, It's 11 questions. You have one joker, so it means that if you don't want to answer this question, we'll have 10 questions. And you, as you can understand, you can only answer by yes or no. They are not that tricky. It's pretty easy. It's about Mantle. It's about the blockchain ecosystem. It's about everything related to blockchain. Are you ready?
Let's go.
Perfect. Is Mantle currently fully EVM compatible?
Yes.
Do you see Mantle as a direct competitor to Optimism?
Yes.
Is Mantle's modular architecture fully open source?
Not fully. No, not yet. The Eigen DA part, we've not been able to fully open source it because Eigen itself is not in production. So yeah.
Okay. Are NFTs overrated JPEGs?
No.
Are central bank digital currencies, so CBDCs, a threat to decentralized cryptocurrencies?
Yes.
Is crypto a winner takes all market?
No.
Is the flippening of Ethereum overtaking Bitcoin likely to happen someday in the future?
Yes.
Don't you think that there are too many L2s?
Yes.
Would you accept to be paid in Doge if it becomes X, I mean Twitter, new currency?
I would prefer decentralized stablecoin over Dodge.
Do you consider DeFi to be riskier than traditional finance?
At the moment, yes.
And this is the 11th questions. Is proof of stake superior consensus mechanism compared to proof of work?
I would say yes.
Perfect. 10 on 10, 11s on 11s. Congratulations, Arjun. You passed the test. You nailed it.
Yeah, no, thank you. Thank you
Um,
so much. Yeah. With optimism, it's very interesting because right now we are competitors, but we've also been watching the OP collective story. So that's like very interesting for us, the super chain thing we have. And sometimes we also ask ourselves that is this something which, a direction we could think in, maybe, join the collective or do something like that. So right now I would say we are competitors, but I think we're very impressed with the vision of optimism. And it's not just us. I think a lot of chains are joining, like, forces with them. So we're also trying to figure out what the next steps for us would be. I'm not saying that we would do it, but it's something we've been closely watching. Yeah.
awesome. Well, thank you very much, Arjun. Thank you for your time and your lights on this podcast. And yeah, hope to see you on a future episode about to talk about mental upcoming developments.
Sounds good, and I look forward to the next conversation. Thank you, Clement. Thank you for having me.
Thank you.